Welcome to the Investing Podcast presented by Tusk Media. This is Outsider Trading, an audio and video deep dive into the people, places, and things that we find most interesting in the market.
Hey everybody, welcome to a special edition of the Investing Podcast. Special for a number of reasons. Obviously, a lot of panelists up here. We're talking about Janet Yellen and what she said today in Jackson Hole. And also special because we're getting more than one camera angle. I don't know if you guys have noticed, but intern Garrett here trying to figure out something. I don't know what, but he's yet to get anything right here. Didn't even win poker last night, I don't think. And now he's sitting here walking around with the camera. So we'll see what happens. I'm Andrew Hall. Thanks for being here. The unit, Matt Krebsbach, what's up?
What up?
You won some money last night too, I think.
Some money, yeah.
Some money. Benjamin Nye, rough night. Rough night for you and I both.
Big loser, I think.
I think Ben was the
biggest loser.
Were you the biggest loser?
Yeah.
How many times did you buy in?
Just twice.
Just twice.
$20.
Yeah. I lost 10, but real quickly.
No joke, at the end of it, like the money wasn't right, and then like Garrett brought up to me like I didn't even know that when I bought in, I put in 10 and took out 20.
in chips.
No, the cash. So like it was like all messed up.
Oh, so you really won.
Yeah.
Yeah.
Well, we fixed it, but like it was weird.
I like it. So, Federal Reserve, Janet Yellen we were talking about it all week. It's about 10:45, so we've been seeing parts of this speech for the last 45 minutes. We got market reaction real quick. We'll hit that, and then I'm going to throw it over to you guys, get some thoughts. But Dow currently up about 2/3%. Same with the S&P. NASDAQ up a little bit more, closer to 1%. And this is kind of a fluid situation, so that's why I'm not even using specific numbers. But we got the global Dow up. We got gold up 1.5%. We got oil up. So GREENGASM on a Friday. Always great to see that. But Ben, talk to everybody about what we were reading, what Yellen was saying, and especially you've got some thoughts on just kind of how her stance has evolved a little bit.
Right. So back in June, we have the dot plot, which the Fed comes out with that each Federal Reserve member, even if they're not voting, they come out and they give their estimate about where Fed rates are going to be at the end of the year. And the median rate at that time was between 75 and 100 basis points, so almost 1%. We sometimes can estimate and suspect that Yellen falls right in the middle of that because she likes to be the arbiter. But right now in her speech, she says, and I quote, "I believe the case for an increase in the federal funds rate has strengthened in recent months. But as ever, the economic outlook is uncertain, and so monetary policy is not on a preset course." The indication that her thoughts about the rationale for a Fed rate increase strengthening suggests that there's more credence to the two Fed hikes this year, and it would just make sense that one would happen in September and one would happen in December. However, then she goes back through the entire remainder of the speech, and she goes into great detail about how basically she wants to hike, and seems like she's projecting that she's going to hike in September, but the Fed really doesn't need to just to give themselves room to cut for the next recession. They say that even if rates were here when the next recession hit, they'd have enough tools in the toolkit, asset purchases, expectations, and resetting expectations, that they think they could provide enough monetary policy accommodation in order to help mitigate the downside if a subsequent recession were to hit in the relatively near term.
Yeah, it was kind of an interesting departure even just from the consensus. I mean, all week, take this podcast, for instance, we've been talking about Yellen, almost as the figurehead of the Fed, and talking about the Fed specifically as it relates to a rate hike or potentially two over the remaining months of this year. So you have that, and I feel like the market, 80% of the macro conversation has been interest rates for the last year plus. So you have that, and then at the same time she's even mentioning, hey, things that Congress can do, and just talking about this broad array of ways of almost like, hey, let's take the focus off of interest rates, but to your point again, but I want to raise it.
Right.
Krebs, any thoughts on the hike? Are you surprised? What do you think we're actually going to see? Are we going to get one in September?
I'm not really surprised. I think we may get one in September, but I think we're only going to get one for the year. I think the raise is gonna be super slow just because like the global picture.
Mm-hmm.
And even if they do raise it in terms of like, just speaking like the 10-year treasury, like they raise the rates, but then even more money's gonna come plowing into it, like for just like internationally, just because every other rates are so low that I don't think that'll move that much even if they do raise it.
Mm-hmm.
It would be really interesting to see if we did, to see if something like that happened, how the Fed would respond, because we all know like they hate if the interest rate curve inverts.
Right.
I get
Right.
So what we mean by this is when the 2-year yield rises, or the 10-year yield rises such that it's higher than the 30-year, because people view that as one of the most viable recession indicators. So the Fed hates to see that. So if they're hiking up the short end and people are flowing into the long end,
Yeah, and when we like
dropping
for
that
those
yield.
listening, I mean, when we talk about like the curve, we are literally talking about hey, here's the plot, and you start to see this end get lower than there. It's a literal curve that we're talking about. Some of these things, I think, if you don't follow this stuff, like the dot plot,
Right.
like it's the most primitive thing imaginable. Like we probably should have just dot plotted everything we've ever done on this podcast, because apparently it's viable. But like some of this is like not quite as complicated to actually look at and visualize.
Right. What's also interesting is the makeup of the Federal Reserve. So this rotates every year. You have your standing committee members, and then you also have the Federal Reserve Bank presidents. And not all the Federal Reserve Bank presidents are voting members each year.
Mm-hmm.
So they rotate. This year we actually have a really dovish Fed. We kind of have the three people who kind of flow in the breeze, and that's Yellen, Dudley, Fisher, Powell. They'll probably go together.
Mm-hmm.
Then we have Mester, who is Laura Mester, she's really the one hawkish member, genuinely hawkish member on the Fed. So she would probably go along with a rate hike. So we're up to 5 out of the 9 right now. I think we probably need more consensus than that. So you have Bullard, who knows what Bullard thinks. Like he just comes out, spouts stuff, and then retrenches the next week. So you don't know what he's going to do. And then you have their two remainders are Rosengren and Tarullo, and both of them have publicly stated in recent weeks that they want to wait on a Fed rate hike. So if the Fed does hike, it'll be interesting to see how many people dissent,
Right.
and who those people are.
And we do we have a lot of construction going next door, so hopefully you heard some of that. Ben said some good stuff. But I agree. I mean, this idea of a divided Fed, even almost if you get into any kind of political climate or anything like that, it's kind of fun to watch this, to actually see this breakdown, because at the end of the day, I mean, these are humans and they have their own blind spots, their own biases coming into this. So it's always kind of intriguing just to see where that actually falls and how it lays out.
Question, are you more excited to see how that plays out or more excited for the first presidential debate?
Definitely the first presidential debate. I mean, that's like pretty high on my list of like things over the course of my lifetime.
The ratings are going to be so huge.
It's going to be great. We're going to dot plot that. You guys got anything else? I've got one more headline that I think we need to address, but you guys have anything else?
That's it. It's very interesting market reaction, though, because
Yeah.
I would thought it was a bit of a hawkish statement.
Mm-hmm.
And yet we're seeing a lot of an opposite reaction than we thought.
Right.
Bond yields going lower, gold rising, stocks rising too. Although that could have changed by now.
Right. Yeah, I know. I was just looking to see if we had anything change. The one thing I want to mention, headlines. We get a lot of this stuff from MarketWatch. Our disclosure even mentions MarketWatch, and I just tweeted this out. But I want you guys to spot the headline that doesn't quite add up here. Pity the fools fighting the Fed and buying these stocks. So that's the headline. Here's what the Fed's rate should be using the rule footnoted in the Yellen speech. NASDAQ composite gains 0.8%. And updated, they'll do like a little updated. My toddler threw up on my shirt and the airline tried to make me wear it.
Yeah, I saw that one.
That's an actual headline on MarketWatch right now.
They do those weird ones. Something.
As always, and it's like that's apparently an evolving situation with that toddler vomit shirt on an airline. So keep an eye out on that. We'll try to give you guys an update. We probably won't be back today. It's Friday afternoon. You guys want to go have some fun. Shout out to intern Garrett. He definitely made us feel real uncomfortable walking around in here. So hopefully you guys feel equally seasick. And hopefully the sound is decent on this. Krebs, any weekend plans?
I think we're playing quite a bit of tennis.
Yeah.
Ooh, tennis. And you gonna get some revenge?
Probably not.
So a lot lot of tennis for both of you guys. Ben, you got anything else going on?
No, that's about it.
Very good, very good. Well, you guys have a great weekend out there, and we'll talk to you all Monday.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.